Welcome back to your channel. My name is Brad, and today we're going to discuss what did my 500K portfolio pay. If this is the content you're looking for, stick around. For those that are new to this channel, my name is Brad, and I retired 5 months ago. I built out my covered call portfolio, and I'm going to share with you what it paid in end of December, beginning of January. This is not financial advice, legal advice, or any other advice, just what my portfolio has done for covered calls. First of all, I'm going to go ahead and express this is not all that I have invested. I have 5 pillars: covered calls, business development companies, preferred stocks, alternative, and CLOs. Those are my pillars that I invest in. Today's video is only covering covered calls. And believe it or not, covered calls is not bigger than everything else. So it is the largest portion of my portfolio, but when you add up all the other pillars are actually bigger than covered calls. That's right, bigger than covered calls. I have it spread out so I don't have to worry about the stock market going one direction or credit going one direction, or alternatives going one direction, or anything else. And why do I say that? I say that because I went back and tested. I tested SPY-I, SVOL, PBDC, PFFA, and EIC. EIC is 0% correlated. That is correct. 0% correlated to SPY-I. You can actually see SVOL is negatively correlated to EIC. So it's important to understand these pillars, that they're not correlated to other pillars. So you have zero correlation between SPY-I and EIC. And that's important to live on, because if you have 100% correlated assets and they go down one direction for whatever reason, you're going to have issues. Now, also look, if you look at that chart, annual returns are 18 for SPY-I, 16 for SVOL, 24 for my business development company. My preferred stocks is 16.2 and my CLO is 19.9, just to give you what the annualized returns were. You can also see the standard deviations, and you can tell by the standard deviations that some are more volatile than others. And that always has to be taken into account, because you're going to have up days and down days in all these assets. But hopefully some are going down when some are going up. Now, I've shared this chart before in the past, and I want to make sure I explain it a little bit better. So I'm looking for 8%. So if my ETF cover call is paying 11, 12, 13, or 14, I can go down 27, 33, 38, and 42% and still get my 8%. And that's important to understand. When I look for cover calls on indexes, I'm looking for someplace around that 11 to 14%. When I look at call spreads, I want something higher, because call spreads have a tendency to pay higher rates, but also you can get yourself into where they don't keep up. So you may or may not have to put a little dollars back into them, and you should always be averaging into your funds. Just a little bit. But you can ask, why, Brad, did you say I have to average back into my funds? Well, don't you want a pay raise? Just thought I ask. Because if you're not putting more money into the funds, guess what? You're not going to get a pay raise next year, or the following year, or the following year, or the following year, and the following year. So you can actually understand that inflation happens every single year, and you're not going to get a pay raise. So that's why you should average back in, or take some of those distributions and build out others that are going to pay you, so you don't have to worry about inflation catching up to you over time. So what do I have? I have SPY-I, I got QQQI, I got IWMI, I got SPY-T, which is a call spread, GIAX, which is another call spread. I have FEPI, AIPI, and TSPI. I have TSPI because that's my zero DTE fund. FEPI and AIPI are FANG and AI, and they do cover calls on single stocks. SPY-I, QQQI, and IWMI are indexes, and they are by NEOS. My current cost of these are $536,000. I looked on Monday just to bring up some costs and put some dollars to it. So right now I'm at $541,000 of my actual worth of these funds. You came along to watch how many dollars did Brad actually get from end of December to the first week of January. And the answer is $8,623.74. I use 8%, and that's 8% of my cost. So I'm going to use $3,575.54. Please keep in mind, I have all those other investments. That's right, all those other investments generating over 8%. And guess what? You can now think that number I'm living on might be a little bit higher, but I'm reinvesting $2,524 back into the funds on ex-dividend date. I moved the other $2,500 to JAAA for future investments. Now, this could be building something else out, or, and this is the big or, if the index is below. So we're going to take SPY-I as the example. I'm going to take that $320 and just reinvest it all back into SPY-I if the index is below the 50-day moving average. If not, I'm just going to take the 160 and reinvest it back in. So I always get these questions of exactly how does this work? SPY-I, I'm going to use as an example. I take dollar cost, times it by 0.08, divided by 12, and that's how many dollars I'm going to use to live on. That gives you the example of how this works. And as I put more money back in, my dollars cost goes up over time, which means I can cover inflation. That's right. You have to worry about inflation catching up to you. That's what I do. Going forward, I'm going to be doing this more often. The last few months in retirement, I didn't do this. I took things and moved it around and tried to figure out what I like and what I didn't like. My current portfolio, I like a lot. It's very simple. It's very easy. I can manage it within a few minutes every week. I don't have to spend days and hours and trying to figure out what I'm going to do with this and do with that. I've narrowed it down to what I like. I'm looking at 2 additional funds. No reason to rush into anything because I don't have to. I have enough money coming in that I can sit back, retire, and do videos for everybody else on other investments that maybe you'd like to get into. One thing I am going to do, though, coming into the new year is FEPI. I'm only going to reinvest back into FEPI my 50% of what's left over. I'm taking that other 50% and I'm going to move it into TSPI. That's right, I'm going to move it into TSPI. AIPI, I'm going to take all of that money. So it has a leftover of $588 this month, and it had a leftover beyond that of another $588. I'm going to take all that and reinvest it back into AIPI every single month. I want that AIPI to get a little bit larger in percentage of the portfolio over time. Don't have to rush into it, but over time, I'm going to build out AIPI to be a larger percentage of my portfolio. That's what I'm going to do. Now, fortunately, I have enough money sitting into JAAA that I can buy every one of these on ex-dividend date coming into the end of January, beginning of February. I do not have to wait to actually get paid. So I'll just go ahead, and when ex-dividend date comes up, I will go ahead and reinvest into these and take the money that I need once I receive it and put it into a separate account. I think that was probably one of my better decisions. is anything I'm reinvesting, putting it into JAAA, and everything that I'm going to live on goes into a money market account right there in my IRA. So I can separate the two monies. So when I have a buying opportunity, I can quickly sell JAAA and buy what I want. And I don't have to worry about money coming in for my next month. Actually, it's several months of going forward of distributions that I'll be taking out of my IRA so I can live on. No reason to live month to month. I don't need to live month to month. And if there's a bad month, hey, I can reinvest everything. But right now, I'm going to continue to build out my money market account. So I'll have multiple months sitting there and build these out so I have inflation proof the total portfolio over time. Lastly, I was going to go ahead and show the graphs. So currently, SPY is below the 50-day moving average. So as long as this continues to happen at X dividend date, I will be investing 100% back into SPY. The same thing could be almost said about QQQI. Currently, it's not below the 50-day, but hopefully it gets there because I like a buying opportunity. And IWMI is definitely below the 50-day, 100% after my 8% will get reinvested back into IWMI and continue to build those funds out. That's what I'm going to be doing. And hopefully this tells you exactly what I'm doing and how I'm doing it, and just sharing what I'm doing. It might not even be the right way of doing it, but it's the way that I'm comfortable with it, and you need to figure out what's comfortable for you. So until next time, God bless.